Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. I hope everyone is having a wonderful weekend. It is currently Sunday, September 7th. As you know, I founded Breakpoint Trades 22 years ago, way back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and my personal passion, which is mechanical trading systems. This, of course, is my mega stock market weekend update review. It is September 7th, Sunday. Again, those of you who may be new to our channel or our website, these weekend newsletters are very comprehensive. Usually take anywhere from 40 to 50 minutes. We cover, say, 50 to 70 charts or more. We do a broad market overview of the major indexes, sectors, various indicators, commodities, cryptocurrencies, precious metals, and of course our trading systems. And again, we focus on technical analysis. And if you're on YouTube, please like, subscribe, comment. That really helps the channel. And actually consider supporting us. Consider taking a subscription to our amazing service. Go to breakpointtrades.com, click on, the enroll link. All right, this is our backend recorder for our website subscription service, which I'm going to go ahead and start right now. Hello everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a wonderful weekend. It is midday Sunday, September 7th, and this is my comprehensive technical analysis review of the markets. Again, as you can see, newsletter is divided into 8 major sections. Got a lot to discuss here, as I usually do on the weekends. I go over quite a few things here, guys. Again, I like to do a broad, very detailed technical analysis review of pretty much all the markets. All right. So first off, just doing a quick review of last week. As you know, we had a little shot across the bow on Monday as the market had a big gap down, and that was very timely. It came in right after the Labor Day holiday, and we were, the first trading day of September. September is typically one of the weakest seasonalities of the year. That said, it's held up so far. Usually, though, it's the back half of September that's been the weakest, which we're approaching. But anyway, the market in its normal buy-the-dip fashion recovered from Monday's lows and pretty much rallied the rest of the week to new highs. Okay, everyone is waiting on the jobs report on Friday, and per my discussion on Wednesday, when I said that it was likely to come in very weak, looks like I got a little typo here. I got to fix that. It did. It only came in 22,000 net jobs created. So market didn't like that. Chopped around on Friday. Ended up down off the lows though. But again, that obviously gives some fuel for the Fed to cut next time. All right. And also, furthermore, we have next Wednesday is when the revised jobs data is released. That's for the previous month. And as I showed in the slides from Wednesday, and I'm going to briefly cover those here today, I expect another big downward revision. Heck, maybe we'll see even negative job growth. So that'll be further fuel for the Fed. It doesn't mean, though, that the market just goes up to the end of the year. Remember, it's sort of a positive and a negative. It's a positive because the market really runs these rate cuts, but it's a negative for the economy. This job growth continued to weakening. But so we'll see the reaction of that this week. I'm still looking for some sort of eventual wave 4 pullback here in the fall before we have an end of year rally. I don't expect the market just to rally up to the end of the year. Again, anything's possible. Again, as you know, on Friday, the unemployment rate ticked up to 4.3%. And honestly, guys, would hate to tell Trump this, I'd expect this to continue for the next couple of years and creep higher, as the charts typically show. Once the unemployment rate starts in a trend, it usually continues, kind of like a barge. It's hard to turn. I'll show the chart below. Again, like I said, second half of September is generally the weakest historically. One area on Friday that got hit we want to keep an eye on is the financials and the banks. They sold off pretty good. In particular, I'm showing JP Morgan and Charles Schwab. Charles Schwab especially had a big ugly candle on Friday. As far as the interest rates, again, remember the Fed doesn't control the long bond. That's the bond traders, so hopefully they trade along with the Fed. They don't have to. But we did see a big drop in the 10-year, 30-year Treasury yields last week, down about 3.3%, so that's a good sign. Precious metals, as you know, have been an absolute tear. Silver is now in the 40s, guys. Remember, one of my targets is 50 bucks. I think longer term, one of my targets are around $70. Gold is almost up 37% this year, guys. That blows away the market. And silver's up 42%. Remember, I called a big bull market in this in last year, February of 2024. That's part of my Matt's Macro long-term plays. Now, this week, guys, the real news items are the PPI, CPI, the inflation data on Tuesday and Wednesday. Obviously, the CPI is more important generally than the PPI. All right. And of course, Wednesday, we have those revised jobs numbers. Okay. As far as the market, like I said, we haven't broken any previous higher lows. We haven't broken structure. So there's no changes to the trend. So let's keep that simple. So let's just show you this first chart here. Again, I'll discuss this below, but again, just keeping it simple. This is a half-day chart of the S&P 500. You can see the lows there on April 7th. You can see first rally up, higher low, higher low, higher low, higher low. We have a succession of 7 higher lows here. So until we break one of these higher lows, that would be a break in structure. You got to be careful about being bearish here, guys. We could just continue. Eventually, we're going to get a pullback, right? Eventually. But again, until we break structure, nothing's changed with the trend. And again, you can see the moving average ribbon. That's been a great guide. You can see how it flipped to a bullish stacking in mid-April. It's pinching here a bit. MACD is recycled to 0. But again, no changes in trend yet. And next, image number 3. So I'm going to discuss, as you know, we have our amazing systems here, our KISS systems, and we have the mean reversion systems. So the typical QQQ daily mean reversion or KISS trend following mean reversion system combo that I've been shown in the newsletters, I'm actually providing a link to all the trade list for that. I may eventually add that to the website as well as others. But it's pretty amazing. You got to take a look at the stats. Again, pull it up on the YouTube channel or pull it up from your email. This is a link to a Google spreadsheet. So, let me see. Again, if you're on YouTube, you can see this. You can see the trades here. So you can go through all the trade history, the annual stat, annual trades, monthly trades, the stats, etc. It's pretty cool. Next. Image number 4. So here's that triple Q daily KISS system mean reversion combo. So again, it combines the best of both worlds. KISS trend following. This KISS system went long essentially on April 9th there. Set a stop, trailing stop basically at the low, 408.14. And it has progressively raised that stop up all along. It's still in that original long entry from April 9th. Pretty damn good, right? Well, as you can see here, the vertical magenta lines represent mean reversion trades that can occur inside the main KISS trend trade. And you can see there's been 4 of them, all winning trades. And we still have an open one here from a couple weeks ago where the system went long right on that ATR. It's still holding that from now. I did add some other things to the chart here. Just some visual things like in here it says magenta lines equal the mean reversion longs. Okay, so they're easy to identify. I added a volume indicator here and various, I'll from time to time I'm going to reference what these are. White volume is climax down, red is climax up, climax churn. Yeah, got to remind you guys of something, but I'm not going to even comment on it because of YouTube. And, here's one thing that helps trigger some of the mean reversion trades, this indicator here when it gets oversold, you could see. So it's a nice visual guide. 60 stochastic, when it's above 50%, you're generally uptrending. So a lot of general information on this chart. But again, make sure to look at the trade or pull up that Google spreadsheet so you can look at all the trade history and trade stats to this system. Next. Image number 5. So here's a couple slides I discussed last week on Wednesday. These were from Zero Hedge, and they made a pretty good case that, I mean, the government, it's everyone knows about it that their jobs that come out are pretty bogus, kind of fake data, you could call it. And you can see it used to be pretty, this chart here, you can see the official payroll in green and then the manipulated data, haha, in there in red. They were pretty close, and they started really to diverge way back in 2003, and it really got really wide here. So this needs to revert back to the mean, and that's kind of what it's doing. That's why we've been seeing these huge job revisions. Remember, we have the jobs revision next Wednesday, and I'm expected to drop again. That'll be yet more fuel for the Fed to basically be forced to lower overnight rates. And this table down here is really good a guide. You can see how, the real data and the estimated data were pretty close in the past, and they started really, really diverging. Okay, so wasn't surprised that we had a very weak jobs number on Friday, 22,000 jobs, and that was also an early warning of that was on Thursday's initial jobless claims. Next, image number 6 is the unemployment rate. This chart goes back to 2006. And I've discussed this many times, but again, this clicked up to 4.3% last week with that jobs data. And again, what I'm showing here, guys, is the unemployment rate moves like a barge. And because of that, you can just use these fast moving averages, these crosses as confirmations, the 5 and 9 EMA crossovers. You can see the 5 crossed over the 9 EMA back on early 2007, and then boom, had that big move up into 2008 and 9, remember? And then it crossed to the downside here, and you had a big decline from 2010 all the way to 2020, essentially, right? Then it crossed up, then it crossed down. The point is, whenever these cross, usually it sets the trend for several years or more. And this crossed up way back in 2023, so I expect it to still continue higher. Maybe we'll continue to see this tick up into next year. I do think 2026 could be more of a trying time for the market, just for a variety of reasons. Presidential cycle, second year generally isn't as good. Market will have been up nicely for 2 years, 3 years, and usually you're due for a down year after 3 up years. And just from a variety of other factors and fundamentals, stuff like that. Next, image number 7, gold. Here's a chart of gold. Gold had probably one of the most well-spotted symmetrical triangle patterns ever. And so obviously he had a nice breakout. It's on a tear here. 3,600 to hit a high last week. We'll see where this ends up topping out. Long term, I expect it to go much, much, much higher, but eventually it's going to have a top and then some sort of consolidation. But again, I called this way back in 2024 when it was low 2000s. Next, chart 8, here's a weekly view of gold. So again, it was Matt's macro essentially last year in February 2024 when I called the big bull move here. You could see gold was coming out of this weekly base. Whenever you're coming out of weekly base, guys, that's your best macro swing plays, okay? And it's just been on a tear since. It formed that IBS coil, and it broke out to the coil. So we're in some sort of wave 5 here. You can see this wave 1, 2, 3, 4, 5. Now, again, we are setting up some divergence here, so I'm thinking this could end up with some divergent high eventually, unless the divergence gets blown out. But that's what I'm watching for. Okay, so that's some preliminary things in the market, guys. Let's move back to the major indexes. So image number 10, this shows you the index sector table, what transpired last week. You can see Friday, and of course, we'll focus on the week. You can see the major indexes closed up for the week with the Nasdaq up about 1%, same for the Russell, S&P up 0.3%, and the Dow Jones, old economy stocks, down 0.3%. As far as the 21 market sectors, slightly more were up than down, but definitely some weakness here. Transports, banks, financials, as I warned about. Energy has been quite weak. Otherwise, again, everything is tech, as you know. They dominate the weightings on the indexes. Currency-wise, US dollar, big sell-off on Friday on that jobs number. Not surprising, but it still managed to tick up 0.1% for the week. Cryptocurrencies were up. Bitcoin, Ethereum down for the week a little bit. Commodities mostly to the downside here, with crude oil really taking it on the chin, down 0.3%. DBC, the index, down 0.8%. Big weakness here in all these ags and stuff. Obviously, precious metals were the strength. Gold up 4%, silver up 2.8%. GDX, the miners, continue to lead up 5%. And you can see on the bond market the big decline in the 10-year, 30-year Treasury yields. Next, image number 10 shows the economic news calendar, which I already discussed. Like I said, CPI on Wednesday, PPI on Tuesday, inflation data. And of course, remember on Wednesday, we have those, revised jobs number for the prior month, which I wouldn't be surprised to come in way down. Next, image number 11, moving back to the chart. So here's JP Morgan, as I stated. The banks are something to watch this week. You can see a big drop in JP Morgan. Now it's still holding its 50-day, but we got to see if it loses this trend line here, then it could move down to this demand zone down here, right around the 200-day moving average. And chart number 12, here's Charles Schwab. Now this one quite ugly, kind of has a little head and shoulder look to it here. Big sell-off on Friday, sliced right through all these moving averages, especially the 50-day. That's now resistance on a bounce. You got a little minor demand here, but again, we'll see what the banks do this week, guys. Financials, if they weaken, that could be something that could affect the market. All right, back to the general market indexes. So chart number 13, here's the chart of the 5 key major indexes, the weekly view. Again, the Dow ended up slightly down, but everything still continues to hold up here. You can see everything's been riding above their 9-week EMA here since essentially April, so no changes here, guys. The one index that has not made a new high is the Russell, which I've been commenting. It's so damn close, it may want to make a new high here before the market does. So we still may need to see that possibly, just something to consider. Next, now let's move into the individual indexes, chart number 14. Here's the monthly view of the S&P 500. Again, just showing the bigger picture view, guys. For those of you who want the big picture. Like I said, no changes. We've been in a secular bull market since March 2009. You can see the various obvious channel. There is some divergence here showing up on the MACD and RSI, but again, no reversals. Next, chart number 15. Now, if you want the really, really big picture view, all right, here's the chart, guys. The newsletter one's getting cut off, but here's the big picture view. You can see this if you're on YouTube. This is essentially the really, really big, picture view. So going back to the 1920s, you can see the market in secular bear market, secular bull, secular bear, 1960s, 70s, secular bull, 1980s to 2000s, secular bear, and we've been in a secular bull. And so far, this secular bull is not as long as this previous secular bull markets. One thing that's behaving a little bit differently, I'll say here, you see the ADX indicator with the plus and minus DMI. Notice in these previous secular bulls, you've seen a big expansion in the ADX. We're not seeing that here. It's more just muted. Kind of interesting. Anyway, doesn't relate to trading at the moment, guys. I'm just showing you the big picture view. Next. Chart number 16, here's the weekly S&P, again up 0.3% for the week. Continue to ride this 9 EMA all the way up. We have these weekly demand zones below. Huge rally, of course, off that April demand zone. That was such a great buying opportunity. And chart number 17, here's another weekly view with these wave counts. Like I said, we're in this wave 5 structure. We obviously blew through this one target a little bit at 64.57. Another potential target to the upside could be around 69.58. Doesn't mean we go straight there without a pullback first. Again, we've had quite a run here. Next. Chart number 18, here's the daily KISS systems for the SPY ETF and S&P 500. So the SPY here on the left, it's a tradable instrument. It's kind of similar to the Qs. It went long there essentially around April 7th. It's been long that entire time. And you can see the 4 winning mean reversion trades inside there. Now the smart trailing stop is still a little bit wide here. It's around 615. The S&P cash, it got out recently, got back in. So, hey, it is what it is. Next, image number 19. Here's the 4 time frames we like to look at. So the daily up here, upper left, we have the end of bull cycle here, so I'm kind of keeping an eye on that. The cycle indicator, again, it's end of bull cycle means it's trying to guesstimate some sort of wave 5, but don't get bogged down into that. Anyway, we pulled back a little bit from it. Otherwise, the low last week bounced right off that ATR trailing stop. You can see price has been ping-ponging around the cycles in the lower time frame. Now let's watch the ATRs here, see if those can add support or not. Next, chart 20, here's the daily S&P 500 I've been showing with this breakdown of the wave count structure. So again, like I said, guys, we're still just chopping higher, chopping higher. You know, we've been in this wave, this expanding nested 1-2-1-2 wave pattern. Again, if you don't understand it, don't get bogged down into it. You know, we're in this wave 5 of 3. Once that finally ends, I'm looking for a wave 4 consolidation. All right, but we haven't started it yet, or we can't confirm it until we get some sort of break of structures, stuff like that. Here's your first major support, demand zone here. One thing to watch here, take a look at the RSI indicators. You can see you can draw well-defined coils on the RSI. Remember, guys, you can also draw trend lines on these indicators, not just price. Okay. Another thing to watch is the 60 stochastic down here. Whenever it's above 60%, you're in a trending momentum condition, and it's still above there. Now, when it finally breaks this, that'll be important as well. But again, let's watch the coil action on the RSIs. Let's watch this week with the news, see if we get any breaks of support or not. Next, chart 21, here's the half-day chart that I showed early on. Like I said, keeping it simple, KISS, higher lows, you know, higher highs, higher lows. So until we break a previous higher low, you know, or break structure, you know, you really can't be calling any sort of tops at this point. Okay. Doesn't mean you can't be cautious and take some hedges, but, you know, we haven't broken any structures or previous higher lows. Next, chart 22, here's a 2-hour view of the S&P. You can see those last pullbacks during August all bounced off this big demand zone. And we now got another little demand zone here that we bounced off from Friday. Now we'll see if we can make a higher low, another high here, or do we this bounce form a lower high? You can see the big sell-off on Friday morning, little bounce in the afternoon. Next, chart 23, here's a 30-minute view. Again, you can see how we held that demand zone last Monday on the gap down. Then on Friday morning, you know, the gap up and then big reversal down on the jobs report. We bounced in this demand zone. Now, the big question is, does this go and form a lower high then come back down perhaps? And chart 24 is the 10-minute view. Here I added some fibs, so if we do bounce up a little bit on Monday, watch these fibs, particularly that 61.8 fib. Okay. All right, let's move on. Chart 25, here's the Nasdaq Triple Q's High Performance Daily KISS System Mean Reversion Combo, which I already discussed. Like I said, beautiful system. I love this chart. We still have the, again, system still long there from April 9th, the original long KISS entry trend trade. And we still have the open mean reversion trade from here. Now, again, we haven't been officially emailing these mean reversion trades out, but it's something I do plan to do. Okay. Otherwise, current stop pretty tight there, 559.23. That's for both the mean reversion and the KISS trend. Next, image number 26. Here's the 4 time frames. So you can see how we bounced off the ATR on Monday's pullback. So triple Qs are pretty close to all-time highs here. Also, again, I'm going to be referencing these volumes. So white down is climax down. Now, again, after you get, you know, a move down in the markets, if you see that, sometimes that can mark a low, like you could see it did there in July. So I'll be referencing that sometime. You got a white volume bar here on Friday, but I ignore that because we're not downtrending here. Okay, so, you know, but anyway, I'm just showing you some examples of that. Here's the half day. You can see the climax down after that big sell-off, and that marked a bottom. So I'll be referencing this volume once in a while here. Okay. Otherwise, you can see at the lows from Friday, we bounced off the, you know, cycle supports, stuff like that. And we'll also watch these ATRs. Next, chart 27. Here's the standard daily triple Qs chart. Again, we bounced off that demand zone again on Monday as well, right around the 50-day moving average. And you can see the black candle from Friday. Now we'll see what happens this week. We could easily make another high here. Again, we got a lot of data this week, so we'll see what transpires. Chart 28, here's a 2-hour view. Again, been holding those support areas. Pretty close to the highs here. Chart 29, here's a 60-minute view. You can see how we filled that gap right away from Friday on that gap up. And that's a 15-minute view. Let's go ahead and move on. Now, last index, here's the small caps, Charber 31, IWM. Here's my comments from over a week ago. Not far from the all-time highs magnet. All right, and you can see it's getting closer. Guys, I use this again. I like very simple analogies like the KISS system. So, as you know, you've heard of it, like let's say a stock gets up to $96, $97. It almost always goes to 100. It's like a magnet that pulls it there. So I think of just other things like this. This previous high is a magnet. Maybe it's too damn close here and we get pulled up to it before any sort of meaningful high in the market. Just again, just simple analysis I'm thinking about. We'll see if that ends up happening. And that does it for the indexes, guys. Let's go ahead and move on. Charber 33 or 32, here's the VIX. Still, inside day here. It's right in the middle of the Bollinger Bands. One thing I'll point out here, guys, the Bollinger Bands are pinching here again. So when the Bollinger Bands pinch, sometimes you start to get a trend move, sometimes you don't. Like back here, February, you can see you got a trend move. So we want to keep an eye on that the Bollinger Bands are pinching. That also kind of lines up with seasonality. But otherwise, no triggers off this chart yet. You get your triggers when it's outside the Bollinger Bands. Next, Charber 33, here's the VVIX VIX ratio. This is also an amazing chart whenever this ratio gets outside its upper or lower Bollinger Bands. It can give you these really amazing buy and sell signals. This also, it's not anywhere close to being out of the Bollinger Band yet. Next, moving on to the bond market, Charber 34. First, here's high yield corporate, HYG, JNK is the other ETF. Again, guys, as my comments state here, this is a leading indicator. Okay, the market tends to follow what high yield corporate bonds do. And like my comments back here from a couple weeks ago say, leading indicator continues to lead. So we have not seen any reverses. Now, once we finally start to see bonds, if we start to see them sell off, high yield corporate, and the market's not, that would be an early warning. Next, Charber 35, here's the 10-year treasury yield. Like I said, it's been in this coil for a while, finally broke down last week, and it started to on Thursday, but it was looking weak already here. All right, favored a down move, and then Friday big gap down. So that's a positive for the Fed, maybe lowering rates later. Charber 36, here's the weekly view. You get a big weekly coil here. Now, if it loses this, maybe we'll see the 10-year work down to one of these fibs down here. And if you want to go really big picture view, Charber 37, here's the chart going back to the 1980s. Like I said, we are now in a secular bull market for long-term rates going higher, okay, after we broke this 35-year channel, right? Remember, rates were in this secular bear market for 40 years, right, from the early 80s. But one target on this pullback maybe could be this area. You could see this 3.5%. That's now potentially big support. Next, let's move to the market sectors. So Charber 38, as I said, financials is one sector to watch. You can see the big sell-off here. Remember, I showed charts of JP Morgan and Charles Schwab, especially Charles Schwab looks weak. So let's see what they do this week. If this loses the 50-day, that would be quite negative. It's still holding this for now. Next, Charber 39, here's the banks. Again, let's keep an eye on these sectors this week. Next, Charber 40, here's XLK Technology. You can see it's holding up fairly well here. Is it going to break out one more time to the upside here? Possibly. We'll see. Again, it needs to hold this lower support. Again, like my comments here, it's amazing. Again, big cap tech is everything, guys. You have three stocks here, NVIDIA, Apple, Microsoft, representing roughly 21% of the S&P. That's just unbelievable. Next, Charber 41, here's XLC Communication Sector. That contains a lot of those FANG type stocks, the real weighted ones. And you can see this sucker just continues to rally higher. Next, Charber 42, here's IYR Real Estate. This has been rallying. And again, looks pretty good here. Nice coil. Good volume on Friday. With rates pulling back, that helps, obviously, home builders or real estate. And Charber 44, here's real estate. Again, it's been moving up. You can see up 4.7% last week. Perfect bounce off that low in March. You can see after it retested that trend line there. Here's a couple stops in the IYR real estate sector. CBRE, Little resistance breakout here. And Chart 45, well Tower, another one, has a decent pattern here. Again, those both are in real estate. Next, Chart 46, XLI Industrials, still holding up here. Can you see it's kind of almost coiling maybe? I didn't draw anything, but let's see if it can hold this 50-day area. Chart 47, Transports, it's been a little bit weaker here, but still hanging on here to this area. Chart 48, Biotech has been quite strong here. Remember, this tends to move with small caps, so this still remains very strong. And the one weak sector last week was Energy XLE, just showing the weekly here down 3.35%. Okay. All right, and finally, chart 50. Here's the EEM to SPY ratio. I've also been showing the ACWI to SPY ratio. So these are some of the early macro things I'm seeing, guys, that we're going to see world markets and emerging markets eventually start leading the U.S. markets. You can see they've actually been doing so this year already, but you can see how the ratio flipped here. I thought I also had the ACWI chart in here. Looks like I don't, but I've shown that many times, so I'm not going to bother. But again, these are kind of one of my Matt's early macro plays. You can see I talked about these in early part of the year. But remember, Matt's macro, that means they're good for years. So, all right, moving to commodities, chart 51. Here's DBC, the index. Like I said, down 0.8%. It's been stuck in this range here for the last couple of years. A lot of commodities were down last week except for the precious metals. Chart 52, crude oil. Again, last time bounced off this demand zone, but stalled at the 50-day last week, coming back down to the demand zone. Chart 53, natural gas, did get a rally out of this wedge that I've been talking about. Pulling back here a little bit. Now I'm wondering if this can form a higher low and push again. We are now entering a better seasonality for natural gas, which, again, sold off all summer. Chart 54, natural gas on the 60-minute or 2-hour view, pointed out this wedge, which gave you a trade so far, but still may not be done yet. Chart 55, copper. Copper's been wild here. Still managed to hang on to this support trend line for now. You can see that big sell-off on that tariff stuff back in July. Chart 56, DBA agriculture pulling back here. We'll see if we can find support at the trend line there. Again, this is another one of Matt's macro plays back here in February 2024 on this cup and handle that played out. Next, chart 25. Here's the daily view. Again, pulling back here. I'd like to see if it holds these major moving averages around this area. Some other Matt's macro plays. Chart 58, platinum. This is the weekly view, up about 0.5% for the week. Remember, guys, I pounded the table back in March and April on platinum. Broke out of this weekly coil there in May, so it gave you a good 35% trade. And again, this is still long term, guys. I expect it to go up longer term now. Again, it may consolidate here a bit. I wondered if this is going to form a lower high, maybe a wave B, but again, it's a long-term play, guys. Chart 59, here's the monthly view of platinum. Remember, I gave all the fundamental reasons for it, from supply and everything else, not just charts. But again, came out of this beautiful coil. We got our first rally of the bull market into the supply zone where it's stalling here, but I expect it to go higher longer term. And chart 60, another one is palladium. I still view this as a Matt's macro play. It's still sort of basing here. It's pulled back here. Now, on this pullback, it's interesting to me. You can see the volumes picking up a little bit, and you can see the moving average ribbon was bearishly stacked all these years, but it's flipped positive and it's holding positive, so it does interest me on this pullback. Chart 61, Remax, that's the Matt's macro play, the rare earth ETF metal. I put this out in mid-June. Thing essentially went up 60%, so you got a hell of a trade, but I view this as wave one of the bull market. It's not done, guys. So any meaningful pullback is buying opportunity. All right, moving on to crypto, chart 62, Bitcoin. Bitcoin last week did bounce off this demand zone for now, so we'll continue to follow. Chart 63, Ethereum still holding above this area, which was previous resistance, now support. Chart 64, there's the big picture view of Ethereum. Remember, Ethereum's part of Matt's macro plays because I like this big weekly or monthly coil. It's been forming here for the last 4 years, so energy is building up. All right, moving on to currencies. Chart 65, US dollar. Here's the daily chart. Sold off on Friday. Still has this kind of wedgish look. It's going to be interesting what it does here, guys. Does the dollar break to new lows? Does it still manage to form a higher low? The longer it goes sideways, the more chance it has as a higher low. Moving average ribbon is really tight. It's pinching. Obviously, rates declining is bad for the dollar, but we'll keep an eye on it. Chart 66, here's the weekly view of the dollar. Again, it's been holding this demand zone here, for the last 5 months. So it's still hanging on to that. And here's the bigger picture dollar monthly view. It also has this big trend line support going back to 2011 in this channel. It's been trying to hang on to this area. It's a big support. Looking at some of the other world currencies, chart 68, here's the Japanese yen. Still kind of has a bottoming look to it here, doesn't it? So some of these other currencies look strong, which would be negative for the dollar. Chart 69, here's the Japanese or the euro, FXE, that's the ETF. It's been on a tear and it's got another coil here. It really looks bullish, honestly. If that breaks out, then the dollar would go down. So, all right, guys. Precious metals, which has been the fun area. Chart 70, gold, up 4%. Huge move. Broke out of this coil last week. Big follow through. So we're in this wave 5. Remember, guys, I was super bullish on this way back in January, February 2024 because it was coming out of this weekly long-term base. That was a hell of a call, right? It's up almost 40% since. Now we're in this wave 5. Perhaps one thing to watch here, unless we just blow up to 4,000, would be maybe some divergence that could form on this wave 5 eventually. Next, chart 71. Here's the bigger picture monthly view. Matt's macro play, like I said. My best guess longer term, I discussed this chart before, we're in a major wave 3 here. Once this ends, we're going to have a wave 4 pullback. Then we'll have another rally to new highs again. So who knows where gold goes in the long term? Maybe it goes to 5,000. I don't know. But again, when this wave 3 does end, I'm looking for a wave 4 of some sort. Has yet to start. Next, chart 72. Here's the daily gold. Again, beautiful breakout from this coil. It had to be one of the best spotted coils out there. This is a perfect coil. Textbook for a book on technical analysis, quite honestly. RSI is a little overbought here, but there's no reversals. Chart 73, here's some ETFs, GLD, beautiful move. Chart 74, UGL, this is 2x gold. Again, guys, you had plenty of opportunities to be in these puppies. And here's another one, chart 75, shiny. I love some of the names of these. That's the 3x ETF. Still a little low volume, but hell of a move. You get triple X move on gold with that puppy. Next, moving to silver, chart 76, silver. Like I said, it's in the 40s now. My bullish call was last year when it was in the low 20s. Anyway, one of my next longer term targets is $50. Chart 77, here's silver on the monthly. Again, you could see, there's where I was super bullish on it, was last year when it was in this coil. So it was around, $25 or so, $26 there. But hell of a move, guys, if you bought that coil break over a year ago. We're now in this supply zone at the moment. Chart 78, here's the bigger picture view. Let me pull up the image. That one's getting cut off. So here's the big picture view, guys. Like I said, silver on the bigger picture has got this big ascending triangle. I mean, how many times have you seen a 45-year ascending triangle? Pretty crazy. So one target, it's the $50 range. Remember, that's been the top previous times, 2011. And of course, 1980, when the Hunt brothers tried to corner the market. I kind of wonder if that's where they got the idea for that movie Trading Places with Eddie Murphy, when they, tried to corner the frozen orange juice market. Kind of interesting, but anyway, I expect gold, silver, eventually to test this 50. So give it a couple options here. It either breaks it, then it comes down and finds support, or pulls back off of it first, then breaks out of it later. Either way, a breakout is ultimately inevitable, is what I'm pointing at. Okay. Next, Moving on to GDX, the miners, Sharper 76 GDX. This has been in a tear here. Yet another doji on Friday. Again, this area has been just absolute momentum. We had that black candle on Wednesday, but that wasn't a really good short as it popped again on Friday. Obviously, getting a bit extended here. One thing I'm watching, guys, is the GDX here with the BPGDM and the GDX-GLD ratio. Now, we do have a little divergence finally on the BPGDM. Remember, it hit 100% recently. It's below 100, so there's a divergence there with price. The other thing I'm watching is the GDX-GLD ratio that measures gold stocks or the miners relative to gold. And you generally need to see that reverse before some sort of top. And this is still trending up. But I am keeping an eye on these because, again, this isn't going to go forever here. It's already had a hell of a run, so we'll keep an eye on that. And Sharper 81, here's the BPGDM Rinco. You can see how it's currently on a sell. But again, you get your triggers off a price, not an indicator. But it is in the overbought territory. Again, your swing trade opportunity was when it was buried down here, 2024, or even on these big pullbacks that we had this year or earlier in the year. Not here. Okay, that's not your big swing trade macro entries. Okay. Next, Sharper's 82. Here's the monthly view of GDX. Again, hell of a move out of that coil from 2024. Okay, eventually it's going to need a rest. Another area that's moved a lot is the GDXJ. That's the junior. These tend to go late. These tend to go late in a bull market cycle. And you can see how it's far from its highs, whereas GDX is already up there. But this could have quite a bit of room, guys. Finally, the final part of this newsletter. Moving on just to a few of the trade ideas we've had. Here's Baba. Continues to work out. Chinese play. Sharper 85, Baidu. Also, this one's really working out. Look at the pickup in volume here recently on Friday. Sharper 86, BEPC was a short recently. And you can see this has been playing out. And on Friday, reversed right off that wedge. Sharper 87, Campbell's Soup, little long idea I showed last week, finally breaking out there on Friday. Broke a little bit on Wednesday, a little pullback, and then breaking out. If you think the market's going to pull back here soon, this could be a lower risk play. Sharper 88, SEPN, little low price stock I showed last week, still looks okay. Possible target up in here. I haven't been adding a bunch of trade ideas, guys, just because of the markets. We have all our systems and everything else, so no reason to flood you guys with stuff. Here's pay sign. I'm kind of watching this wedge here, especially if you can break to the upside. Sharper at 90, UNH. It's also one of Matt's macro plays. Finally starting to move up here a bit. Still holding this 90 MA here. Again, I went through a dedicated newsletter video on this, talked about the various fundamental reasons and chart reasons. So I'm not going to go into that, but this did move up last week. And Sharper 91, CRWV, another one of Matt's macro potential plays. Now this one's pulling back a little bit. If the market does enter a correction, I could see this even maybe testing this supply zone down here. But again, longer term, I like it. And again, plenty of Matt's macro stuff, guys. Again, we'll see where things end up this week. The weekend betting futures indicate a little negative open, but we'll see how things look later. Again, guys, thank you for all your support. And again, if you're a YouTube viewer or you're a Breakpoint user, please put a like on the video. That helps me out. And a comment. That also really helps me out. And if you don't like the video, maybe don't put a dislike. I mean, just don't watch it. Anyway, guys, appreciate all your support. Appreciate all you guys over the years. We've been here for 20 years, and it's humbling. So, all right, guys, enjoy the rest of your Sunday. I'll try to do the same. Take care.